So we're back and ready to tackle those higher price listings.
Right.
We're moving up to the $2 million to $5 million category.
Okay.
What kind of properties do we usually see in this range?
Well, in this price point, you often see investors who want something stable, but with the potential to grow.
Okay.
We see a lot of multi-tenant retail centers, office buildings, even some smaller industrial properties in this category.
That reminds me, in the last category we talked about, that fully occupied retail center with the 7% cap rate.
It seemed like a really solid opportunity.
It did. That retail center is a good example of how cap rates can help you figure out your potential return.
Right.
Remember, you get the cap rate by dividing the property's net operating income by its market value.
Okay.
So a 7% cap rate means that the property is bringing in a good amount of income compared to its price.
So cap rates are a good starting point,
Yeah,
but you said it's not the only thing you should consider.
exactly. You have to look at other things too, like the location, the lease terms, who the tenants are, and how the local market is doing overall.
Right.
Let's say you've got two retail centers with similar cap rates.
Okay.
One has a strong anchor tenant and long-term leases in a growing area.
Okay.
The other one has short-term leases and isn't in such a great location.
I see.
The first one would probably be a better investment, even though the cap rates are about the same.
Got it. So you got to look at the bigger picture, not just the numbers.
Exactly.
Are there any listings in this $2 million to $5 million range that really show this? Oh, absolutely. There's a medical office building that really caught my eye.
Okay.
It has a mix of different tenants like specialists and a pharmacy.
Interesting.
Having that variety helps reduce risk.
How so?
Well, if one tenant runs into trouble, the others can help keep the income steady for the property owner.
That's a good point about diversification.
It's like not putting all your eggs in one basket.
Right. So what about the location in this case? Is that as important as it was for those smaller properties?
Location is always key. This medical office building is right near a major hospital.
Okay.
That means there's always going to be a steady stream of potential patients and clients for the tenants.
So it's all about being where the demand is smart. Now, you mentioned industrial properties earlier.
Yeah.
Are we talking about those massive warehouses?
Not necessarily. At this price point, you might see smaller industrial spaces,
Okay.
maybe for light manufacturing, distribution, or even those trendy maker spaces that are popping up everywhere.
I've heard of those.
And remember those flex spaces we talked about? The lines between industrial and office use are getting blurry as businesses change how they work.
It's like the real estate market is constantly changing right in front of us.
Yeah.
Before we move on to the highest price category, I want to touch on something Joseph mentioned in the email.
What's that?
Those year-end tax moves related to real estate.
Oh, right.
What should people be thinking about right now?
You should always talk to a tax professional to get advice specific to your situation.
Of course.
But some common strategies include depreciation deductions,
Okay.
131 exchanges to defer capital gains taxes,
Right.
and maybe even opportunity zone investments for those who want tax benefits and want to make a positive impact on their community.
So it's a good reminder to get your finances in order as we head into the end of the year,
Definitely.
ready to jump into the big leagues.
Let's do it.
Let's talk about those $5 million to $10 million properties.
All right, now we're talking. This is where you start seeing those larger scale investments.
Okay.
Usually it's institutional investors or people who really want to diversify their portfolios.
Makes sense. So what kind of properties are we looking at here?
Think big apartment complexes, shopping centers with well-known national tenants.
Right.
Maybe even some development land for those with a long-term vision.
Development land.
Yeah. Instead of buying a property that already exists, you're betting on the future potential of a piece of land.
Interesting.
It's higher risk, but potentially higher reward. You need deep pockets and a good understanding of market trends and zoning regulations.
So not for beginners. Now, in this higher price range, does the location still matter as much?
Location is always important.
True.
But at this level, other factors become even more important.
Like what?
Things like access to major transportation routes, being close to population centers, and the overall economic health of the region.
So it's like taking a step back and looking at the big picture stuff that really drives value.
Exactly.
Any specific listings in this category that stand out?
There's a mixed-use development project that caught my eye.
What's that?
It combines residential, retail, and office space all in one development.
Oh, wow.
These types of projects are becoming really popular, especially in cities where people want to live, work, and play all in the same area.
It's like creating a mini city within a city. Sounds pretty complicated, though.
It can be. These large-scale developments have a lot of moving parts.
I bet.
You need expertise in financing, construction, leasing, and property management.
Definitely not a one-person job.
You need a whole team of experts.
Speaking of experts, we can't forget about Joseph Goslan and Eureka Business Group.
Right.
They've given us all these great listings and insights.
It shows you that having guidance from experienced professionals can be really helpful when navigating the world of commercial real estate.
For sure. They know all the ins and outs of the market.
Exactly.
Now, before we wrap up, I want to go back to those pre-election jitters we talked about earlier.
Yeah,
Seems like everyone's holding their breath, waiting to see what happens.
it's true. Elections always create some uncertainty, and that can affect how investors feel and how active the market is.
Right.
It's normal for people to be cautious during these times.
So how can people navigate this uncertain time? What advice would you give them as they're looking at their commercial real estate options?
Stay informed, do your research carefully, and focus on long-term investment strategies.
Okay.
Don't let those short-term ups and downs in the market throw you off course.
Solid advice. It's like they say, time in the market beats timing the market.
Exactly.
All right, before we move on to our final thoughts, let's recap what we've learned about the $2 million to $5 million and $5 million to $10 million categories.
Sounds good.
What are your main takeaways?
These higher price points offer a good mix of stability, potential for growth, and diversification for investors.
Okay.
From medical office buildings to those mixed-use developments, there are a lot of different options.
Sure.
But no matter what you choose, location, due diligence, and understanding market trends are still super important.
Exactly. And remember, we're just scratching the surface here. These examples are just to get you thinking about the possibilities.
Right.
The real fun begins when you start looking at specific properties and markets that match your own investment goals and how much risk you're willing to take.
I agree.
But before you do that, we have one final thought to leave you with. So remember at the beginning of our deep dive, I mentioned how this email isn't just about listings.
Yeah.
It's about insights too. Well, here's where it gets really interesting.
Oh,
Joseph ends the email talking about his team at Eureka Business Group
okay.
and how they've been navigating the commercial real estate world since 2008.
Wow, since 2008.
Talk about experience.
Yeah, that definitely gives them some credibility. They've been through those tough economic times and market crashes.
Exactly.
They must have some valuable insights into what it takes to succeed in this industry.
It's like having a seasoned guide in this crazy, unpredictable world of real estate.
I like that analogy.
And he even encourages you to reach out if you have any questions or want to explore some specific opportunities.
Oh, that's nice.
That personal touch is a nice addition.
It is. It reminds you that investing isn't just about crunching numbers.
Right.
It's about building relationships and learning from people who've been there and done that.
Absolutely.
Yeah.
So as we wrap up this deep dive,
Mm.
let's bring it all back to you. We've covered a lot of ground today,
We have.
from flex spaces and downtown revivals to cap rates and NNN leases,
Right.
from those under $2 million gems to those big league $5 million to $10 million projects.
It's been a wild ride.
What's your biggest takeaway?
For me, it's just remembering that commercial real estate is always changing.
Yeah.
And there's something for everyone.
Sure.
Whether you're looking for passive income, value-add potential, or long-term growth, there's a place for you.
Couldn't agree more. But as we've learned, it's not just about picking a property and crossing your fingers.
No, definitely not.
You've got to understand the trends, the lease structures, even those political and economic uncertainties we talked about.
Knowledge is power, especially when it comes to investing.
So true. And that's what this deep dive has been all about,
Yeah.
giving you the information and the inspiration to explore, analyze, and make smart investment choices that help you reach your goals.
I like that.
So here's a final thought for you to chew on.
Okay.
We've looked at all these different types of properties, and each one would appeal to a different kind of investor.
Right.
But considering everything we've talked about today, what type of commercial real estate investment seems the most promising to you right now?
That's a tough one. There's no right or wrong answer here.
True.
It all depends on your own personal investment strategy, how much risk you're willing to take, your financial goals, and what you think the market's going to do.
Couldn't have said it better myself. And that, my friends, is what the deep dive is all about, giving you the knowledge and inspiration to explore, analyze, and make smart investment choices that bring you closer to your goals. So until next time, stay curious, stay informed, and as always, happy investing.